think a lot of times in our day-to-day job, we forget that people don't deal with the same thing that we look at every day, right? Especially when it comes to financing, buying a home, getting a mortgage. There are so many terms that we use conversationally that may or may not make sense. So I wanted to put out a series to talk a little bit about some of the terms that you hear when you're looking at taking out a loan. This will be a three-part series, so join us for each installment, if you will, as we talk about the different parts in the upcoming videos about what does it mean, what do we mean, what are these words we're using. In today's video, the terms that we're going to cover are purchase contract, attorney review, inspection, can't talk about inspection without appraisal, so we'll include appraisal, mortgage contingency, and closing date. On the day-to-day, these terms seem very straightforward to me, but I realize as I talk to people who don't deal with this that maybe not so much. So, starting at the beginning, first, purchase contract. So a purchase contract is your legal agreement for the terms. This is basically, you're telling the seller, I want to buy your property for this amount of money, I want to close on this date, I'm going to use this type of loan, I'm going to give you this amount of money up front, which is your earnest money. So when you're going through and you're talking to your real estate agent, you want to negotiate on the terms that you're looking to agree upon. Your purchase contract is the written agreement of those terms. Next in line, we're going to have attorney review. So during the attorney review, if you're in a state that uses attorneys, mind you, then this is the period where the attorney will review your contract and the terms that you've set forth. It's common during this time that you'll have a home inspection done, in which case then if you have items you want to discuss about the home inspection, you'll ask the attorney to make those adjustments. Maybe you want to ask the seller for credit, or there's just some other repairs you want made. This is all done during the attorney review period. Keep in mind, once you have a purchase contract in place, you have a legally binding contract. That means that any changes or negotiations have to go through the attorneys. Next in line, let's talk about the inspection. When you buy the home, you want to make sure that that roof isn't going to fall in on your head, or that the bathtub's not going to fall through the floor. Sorry, I don't mean to put an ominous tone to it, but you just want to look to make sure that there's not any immediate repairs or predictable repairs that you're going to have up front, at least no surprises. So you're going to have an inspection done to determine the quality of the property. Is there anything you need to have fixed right now, or something you need to plan for 5 years from now? This way you can plan your budget. I can't talk about an inspection without talking about the appraisal. Main reason being that I find that a lot of people will confuse the two, right? Inspection versus appraisal. What's the difference? Your appraisal, when you're buying a home, is for your lender. It's actually to tell the lender that the property is sufficient collateral. Basically, you're telling the lender that the property is worth the money they're lending on this, right? So the inspection tells people that the property is going to be, there's no repairs. The appraisal tells us that it's worth the amount of money that we're lending you. Up next, we have mortgage contingency. In your contract, you have certain fail-safes, if you will, right? You have dates that are set forth that you have to meet certain obligations. The mortgage contingency is the date that you have to supply a clear loan approval. This means that you've gone through the process, your money is ready. You're telling the seller, in this case, let's say you set your mortgage contingency for 15 days after the contract was accepted. Well, then you're saying, I will have my loan done by that date, 15 days later, or whatever that date is. So the mortgage contingency is to basically get everything done. Last in the contract is the closing date. I know that sounds obvious to a lot of people, but the closing date is when all the action happens. Up till this point, nothing's really final. Things can change. Contracts can be canceled. You can find positions where the purchase price could change because of negotiations during that inspection period. You may be even in a position where for some reason you didn't get the financing. Whatever those other reasons are that can keep you from getting to this big day, well, the closing date is the contract date in which you agree to show up and exchange the money, right? You're going to close on your loan, you're going to go through, you're going to sign all the documents agreeing with your lender on the terms set forth in the loan, and then you're also going to be then providing the money to the seller. So the closing date is when everything happens. This is when you pay your closing costs, this is when you give the remainder of your down payment outside of your earnest money, and this is when you go through and you basically finalize everything. Once you sign the dotted line, that home's yours. These are a lot of terms. I know it seems very easy, but at the same time, this can become overwhelming quickly, especially when you're under contract to buy a home and things start moving quickly. So In next week's video, pay attention. We're going to talk more in depth about the loan, what goes into getting the loan approval, and some of the terms you use when you're going through that process. If you found this video useful, remember, hit the like button, subscribe as we continue to share more information on how to buy a home and how to finance your next place.